What is up, everybody? Steve here. Today, I want to talk about some new news. I mean, everything is so rapidly changing day by day with the stock market, real estate market. And I want to talk about new home sales and how they've crashed most recently. And I want to talk a little bit of some details on that. But before we get into it, I want to talk about financing for a second because I'm truly nervous for some people. And, I think that some people are going to get hurt, and I want to just touch on this real quick because there's a big there's a big debate going on between the last housing crash and where we're at today. Some people today don't think that there's going to be a housing crash at all. Some people do think that there's going to be a housing crash, but it's nothing like the last one in 2008. Now, 2008, there was predatory lending. You had negative amortization loans. And I've had questions from people asking exactly what that means. So, to sum it up, basically, a negative amortization loan is a loan that is given that it's very comparable to like a credit card. So, you got basically your minimum payment that you're allowed to pay, but that minimum payment doesn't necessarily cover the entire nut, meaning it doesn't cover the entire principal and interest. So, for example, if you had a minimum payment of $700 a month for a house loan, but the real payment was $1,500 a month, that's an $800 a month spread that will get tacked on to your principal, and then it becomes compounding interest and just like a credit card. So it was a very evil predatory loan out there. And what's up, Clinton? Good to see you, man. And also, obviously, we had the subprime market and everything else, but also to add to that, we had stated income where you basically, it didn't matter what how much money you made, you could state literally without any documentation how much money you made to qualify for these loans. And also, we had the ability back then to get what was an 80-20 loan. It was two loans, and we did, unfortunately, a lot of short sales for people coming out of the or during the crash. And we were actually able to short sale both loans. So basically, it was an 80-20 loan. So somebody got two loans, 80-20, and ultimately they didn't have to come out of pocket with any money. Now, it was, and that was also combined with a negative amortization loan. So the 80% loan, they literally got into a negative amortization loan, which was just bad, really bad. And then they got a 20% loan to kind of come up with the down payment. And then we had to do short sales, and we actually had to have the first lien holder pay the second lien holder a small fraction to basically get rid of the second lien holder and do these short sales. So I want to talk about, that real quick, because I think a lot of people coming into this housing market, some have never bought a house, some people are very young, and trust me, I've made my own personal mistakes, and I'm just trying to help people hedge their mistakes. So a big thing that we're seeing right now are interest rate or mortgages where there's a decline in refinances, and there's a decline in mortgage applications for your traditional 15, 30-year mortgages. However, an incline in applications has been the adjustable rate mortgages. And I want to touch on that real quick before we jump into talking about new construction. So if you're buying a home and you're using an adjustable rate mortgage, you have to be extremely careful and cautious as to what you're really getting into. Now, if you're buying this, say it's your primary residence and it's for you and your family to live in, and you're buying it and you're getting an adjustable rate mortgage, and you're not exercising your right to get maybe a fully amortized 15 or 30-year mortgage, then you probably can't afford the house. So just keep that in mind when you're proceeding forward, because what's going to happen is whatever term you're on in 3 years, 5 years, 7 years, whatever that term is, it will adjust. And odds are, if we look into the future, odds are the teaser rate that you're going to pay, let's say it's fixed for 4%, odds are that's going to jump up. And if it does jump up, and let's say it jumps up tremendously, let's say it jumps up to 8%, then you're going to be in really bad shape. And then more so, you might be even in worse shape because you might not be able to refinance. And a lot of lenders right now, they're like, get in the adjustable rate mortgage, you can afford it. And then in 3 years, 5 years, before it adjusts, come back to me and we'll refi your mortgage. Now, the caveat to that is you got to make sure that you have the equity position on the property to go ahead and refinance. So I just want to bring that to everybody's attention, because I think that there's going to be a lot of people in bad shape, even in a flat market, depending on how much money you came out of pocket. I think that there's going to be a lot of people in this predicament of, unfortunately, if they have to sell and they can't refinance, they might be in a short sale or foreclosure position. Also, if you guys have questions too, or comments or whatever, I'll read them out, and we can have some discussions about this. So Zero Hedge came out, and in the description, I have everything I'm referencing to, every article I'm referencing to in the description below for you guys. But this just came out for March numbers. Analysts expect a third straight month of declines in new home sales in March, but they did not see the bloodbath coming. New home sales crashed 8.6% month over month. And goes on to say that drags new home sales 12.6% year over year. This is the biggest drop since April 2021. And this is the start of the busiest season in the year for housing. And the busiest season in a lot of areas is springtime, especially up north. In the winter, you're not necessarily out showing properties and looking at real estate. So springtime comes along, a lot more people are inclined to buy real estate, to look at real estate. And we're seeing new home construction on a decline. D.R. Horton claims that 10% of buyers will be impacted, but claims that there are plenty more behind them ready to bid for new homes. I did another video, I think it was last night that it came out, and I talked about certain tips if you guys are in the market to buy new construction. Take a look at that, because we are seeing inventory come back to market, and you might have, depending on where you're at, where in the country you're at, you might have negotiation power. So it doesn't hurt to ask if there's other inventory that's expected to come to market and any kind of incentives that they have. And you really won't know until you ask if there's any inventory or any incentives. So take a look at that video if you guys have time. Now, this comes from the National Association of Home Builders. Growing affordability challenges are slowing new home sales and taking a toll on the housing market, says Jerry Conter, chairman of National Association of Home Builders and a home builder and developer in Savannah, Georgia. Mortgage rates jumped nearly a full percentage point between February and March, and builders continue to face escalation construction and development costs, which are putting upward pressure on new home prices. Yes, I think that we're all looking at, supply chain issues and everything else. And I saw this other podcast by Bigger Pockets, and this lady, I forget her name, but she actually said that it's a blessing in disguise that the home builders have a supply chain issue, because if not, they would probably just extremely overbuild. And it's an interesting take on that. Buyers are facing sticker shock due to deteriorating affordability conditions and the lack of existing home inventory. Only 14% of new home sales in March were priced below $300,000 a year ago. It was 34%. And big thing I wanted to talk about on this, and this is astonishing. I knew it was relatively low, but I didn't realize how low it was. But it goes, this is again in that link. Builders average a gross profit margin of 18.2% and a net profit margin of 7% in 2020. Okay, so different market, but as you know, labor and cost of materials increase. So I think it's probably relatively close to the same for a lot of builders. Who knows? Maybe a lot of these builders are just gouging and making as much money as possible. But in 2020, their net profit across the board is roughly 7%. Now that's a small margin when you're building houses, because obviously and that's what happened too. People are locking in prices, but they really weren't locked in because builders had to actually increase prices on them, because if not, they would ultimately go out of business. Um, if you look at the stock market right now, and I just pulled up basically the largest home builders that are publicly traded, and you know, it looks like across the board, the stock market is going down tremendously in all different sectors of different industries. But over the last 12 months, D.R. Horton is down 28%, Pulte is down 25%, Lennar is down 25%, Toll Brothers down 25%, KB Homes down 22%, Taylor Morrison down 18%. And I wanted to hear what you guys think about that too. I look at it like, all right, home builders do have issues right now. They're up against higher mortgage rates. They're up against people not being able to lock in and backing out of contracts. And they're up against supply chain issues. But I'm thinking, if our market is booming and exploding, then the publicly traded companies, you think that they would actually be doing okay. But it seems like the sentiment there, the consumer sentiment is on a decline, and people are a little nervous about the new construction stock market. So that's going to be interesting to see where those go. The last real estate crash, I saw multiple larger builders go completely out of it. Well, they got bought out by larger entities. And then I saw small home builders just across the board go out left and right. And driving around, and again, I'm in Southwest Florida. Again, everybody's market is different. And in Southwest Florida, we're still seeing a lot of movement of dirt. We're still seeing, new communities getting ready to go vertical. And I don't know. Are they overbuilding? I want to hear what you guys think about it. I think that they're overbuilding. I don't think that I don't want to rely necessarily on the National Association of Realtors, even though I am a realtor, and they're talking about, we have this huge shortage of homes anywhere from 3 to 5 million. I just don't believe that. So time will tell. We'll see what happens. Another thing that's going on, I don't know, bunch of layoffs are going on. I bet we're going to start seeing layoffs in the building industry as well. Obviously, we're seeing layoffs in the mortgage market. Wells Fargo just mentioned or put out that they are laying off people. I don't think that they actually disclosed how many people that they're laying off. Better.com, they just did their third round of layoffs, all mortgage related. I had to set up some more bank accounts. I went into Fifth Third Bank, and I was asking the lady there about, are they laying off people on the mortgage side of things? And she kind of declined to answer my question. So I found that pretty interesting that, maybe there's going to be more layoffs in different companies out there. Let me jump into, I know everybody is busy today, and I appreciate everybody on this call as well. Oh, before I get there, Sunday, look, nobody knows if there's going to be a housing crash. I believe we're going to see a large correction, whether prices go down 50%, like some people are saying. I don't know. But I do think that we're going to see some deals on the market. Sunday at 6:30 or 7 o'clock, I got a video coming out on how to capitalize in a real estate crash and what you guys can do right now to prepare for it. I think everybody right now should be preparing for it. And worst case, if the real estate market doesn't crash, you guys are probably going to be in a better financial position. I'm not a financial advisor, but I think that anybody that watches that video is going to have better preparation coming into the market that I foresee is going to be there, because I'm planning on it. I'm planning on buying distressed assets, and I want to get other people ready for it as well. So I am here to help out. Let's see. Sean Hope. Question, in your opinion, who are the top end single family home builders in Southwest Florida? WCI does really well. And then, a good friend of mine, it just depends on, are you looking in a specific community? Do you want a custom home builder? I mean, one of my buddies builds some monster homes on the beach and the water, and if that's your price point, I mean, he sells $8 to $10 million homes. So it just depends. If it's a community, WCI Pulte's pretty good for more affordable. T Zone R6 up, Steve. What's up, man? The rate update. Dan Frio, are we ready to do a collaboration, brother? Appreciate you chiming in, man. Bitcoin, man. What's up, buddy? What's their stock price looking at 3-year time frame? I don't know, Dan. That I should look back on that. But if you look at year to date, just the beginning of this year to where we're at right now, it's just a sharp decline. Been looking for the Clinton, been looking to build for the last year, but never pulled the trigger. Think we're going to wait out to the next year. I mean, I think I said this on multiple streams as well as videos. We just closed on this condo right here. I really had no intention on selling it, and we put it out at a big number, and we got close to our number. So we're taking those funds, and we're going to sit tight for a bit. Doesn't mean I'm not still looking at real estate. We went and looked at a couple foreclosures the other day, and those foreclosures have multiple offers, which I anticipate. Even right now, we still have buyers in the market, and somebody grossly overpaid, in my opinion, for one of these foreclosures with cash, which is surprising. New construction, the buyers got pre-qualified back in 2021 when rates were 3, now 5.5. Many will not be able to close because they no longer can qualify. If you guys don't know Dan Frio, be sure you follow his channel. He's on this as well. Just type his name in. Real good dude. He is going to give you up-to-date information, anything pertaining to the mortgage market. And Dan, you're absolutely right. 3% now, 5.5%. That's a huge swing for a lot of people. We're seeing people back out of new construction contracts, and it's unfortunate, but and hopefully you guys got your deposits back if you guys were unable to qualify. Johnny Rich, I'm thinking the corrections in the housing will be 25%. Yeah, I mean, who knows, man? Who knows? But we are seeing every day. So I'm a real estate broker here in Southwest Florida, but I love investing in real estate, and I pay attention to the market. And I'm on a bunch of drips that come from our local MLS that I'm looking for, as well as a couple of MLSs in the state of Florida areas that I'm interested in buying in. And I am seeing a trend. I am seeing a trend of two big things. Properties coming back on market. They're previously in contract, and they're coming back on market. And I'm thinking about, let me know if you guys would like me to do this, but like, for example, today, and another thing is price reductions, but like today, one area specifically, there was at least 11 properties that came back on market in that drip email. And I don't know if you guys would want to see this, but I'm thinking about doing it. It's just calling all the real estate agents and asking them why the buyers backed out. Because prior to most recently, we weren't seeing price reductions. We weren't seeing people backing out of contracts. It just wasn't happening. And another trend I'm seeing, again, this is in Southwest Florida. Everybody's market is different. But another trend I'm seeing is not only are they coming back to market, well, they went into contract pretty quickly because I can look at the property history, but they're coming back to market, and then they're staying on the market pretty long as well. So I'm going back after I get that drip. I'm going back a week later, seeing that same property still on the market, another 7 days, 10 days. So our days on market are increasing as well. Johnny Rich, that'd be a great video. Yeah, I mean, I don't want to name names or anything, but I want to just get these agents on the phone so you guys can hear what's going on in our market and what. Now, I do read the comments, and basically, I would say if they did mention in the confidential remarks in the MLS, it's the confidential remarks that necessarily the public can't see. It's twofold. Buyers basically got nervous and walked. And then the main thing is buyers were unable to get financing. So I think that, again, we got people that just are not able to get financing, rates increases, and everything else. So it'd be interesting to see. Marco Bella, greetings from Fort Myers. I'm new to your channel and found it very interesting. I invest in Lee and Collier counties. Welcome, Marco. Appreciate being here. Thanks for subscribing. Greatly appreciate it. See you, Dan Frio. Again, if you guys have not checked out Dan's, we're going to be doing a collaboration as well. I want to talk about the 40-year mortgage and what that's going to have an effect on our real estate market if it is implemented and integrated into our system. I think that there are some lenders that are doing it, but they're not necessarily backed. They're basically, I think, non-conforming loans. Dan, I don't know if you can tell us, but the retirement mentality. What's up, brother? Still on the record that real estate won't crash. I think rates will make things slow down, but once people wrap their heads around the new rates, it'll pick back up. I mean, you called it a year ago when a lot of people were saying that the market was going to crash and everything else. I'm with you, man. But with higher interest rates right now, with inflation, with I don't know. I mean, if you guys look at the stock market, there's a lot of companies that are losing money, and if we see mass layoffs, our job market that Powell is so strongly talking about, I think that there might not be as many jobs in the future as people are thinking. And I think that people also need to be prepared too. If your job is, in certain fields or in certain companies and they're not necessarily, if they're not solvent, be wary, be aware. Non-QM is the 40-year program. Got it. Siegelman, hold cash and metals, ladies and gents, buy homes, not out of FOMO. Yeah, true. So there's so much FOMO. I don't know. I'm hoping the FOMO settles down. I think it is for sure. Marco, I follow Dan Frio and like his daily mortgage rates updates. Yeah, man, he's good. Isaac submitted a bank statement 40-year IO this week. Interesting. The retirement mentality. I'm getting hammered in the stock market. That's another thing too, is are people's IRAs and retirements and pensions, are they getting wiped out right now? Is that what we're on track for as well? If that happens, I think that'll have an effect where people want to free up certain assets. Southwest Florida, we have a shit ton of second home buyers that, frankly, if they needed to liquidate, they would. If they needed to free up cash or go into different asset classes and everything else. Does the market in Dominican Republic, the U.S. housing market? I don't know. I don't know what you're saying there. Sorry. You don't get rich buying at the top of the market. I agree with that. Do you think Lehigh Acres is overrated? The rate yeah, I mean, the rate of price increase in duplexes. I know. I mentioned it before. Lehigh Acres, an area here in Southwest Florida, they called it ground zero with the last real estate crash, and it was bad. A lot of these houses and duplexes were vacant. They had to build cages over HVAC systems and water softener systems. It got really bad. Is there an overbuilding going on out there? Probably. I think there's overbuilding in a lot of different areas and markets. I was out in Lehigh not too long ago. I saw some new construction homes being overgrown and neglected, as well as existing homes. And I think that's kind of the start of it. I would say go into, in your area, wherever you're at in your areas, go into the more affordable housing communities and just take a look at how these houses are upkept. And I think that starts to become a reflection of what's going on. Does the housing market in Dominican Republic follow the pattern that U.S. housing market? I don't know. I don't know. In Prescott Valley, Arizona, home prices are slowing down but still rising. Many from California moving here as part of the great California. Yeah, of course. I mean, a lot of areas are, Florida. We saw a huge influx. I think it's like 1,000 people a day are moving to Florida. Um, in Florida, a lot of things are tied to real estate and construction as well. Or a big industry out here is construction and real estate besides tourism. And I saw when the market slowed down and then eventually crashed, the contractors, the general contractors, the painting contractors, a lot of these contractors, as well as real estate agents, they were getting out of the business. And a lot of the people working in construction literally moved out of the state as well. So there was an exodus out of Florida because there just wasn't work here, and they were finding work in other areas, other states. Anyway, guys, look out for the Sunday video on the housing market crash, what you guys can do to basically capitalize on that. And I appreciate every subscriber. If you're not subscribed, I appreciate it. Appreciate a thumbs up on this video. And thanks for being here, guys.